Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. Yesterday, we did, in fact, get a little bit of that faltering there at the $26 level. But is that going to mean that we trace all the way back down to the downside now? It might mean that we don't get that test of 28.80 this week. In fact, that's basically what I was looking for yesterday. But we do have two scenarios standing out today that I'm going to be watching for in our price action throughout the day. So we're going to talk about those, what that might mean heading into the end of the week and into next week, as well as, have a little fun thinking about what it is that this mystery overnight exto trader has, I would say now, right? I would say my opinion at this point, right, is that we do actually have one person. It may be one person, given that, weirdly, coincidentally, we've had a bunch of trades over the past month or so come in at the overnight exto period, just a single share, one share, but every single trade has ended in 69 cents. So this is a little bit more than conspicuous. So we'll talk a little bit about that today, in addition to some of our price action factors. For those of you who may be new to the channel, every day before market open, I do post my analytics on GameStop over on my X page. So you can find that link down in the description of this video if you're watching this on YouTube. Of course, if you're on X, you can go and take a look at this right at the top of the page. So yes, big thanks go out, of course, Super Mega Ultra once again. Thank you for my coffee today, and to Dat Scruffdo for sponsoring this newsletter. You guys help me keep all of this free and open access for everyone, right? Keep this unmonetized. So thank you so much. I really appreciate all your support now, and to everyone as well in the future who will be thanked in short order. So yeah, one of the things that's come up a bunch very often, frequently, right, over the past several years has been the there's two of them talking meme, right? The idea that I believe it's Roaring Kitty, right? Let us know that Keith and Ryan Cohen perhaps were attempting to speak to one another via memes or via sort of common observations with respect to certain charts. We've talked in the past here, in particular, with respect to Ryan Cohen's kind of seemingly innocuous but somewhat off TA team posts, which we noticed right in December, some of these, and over the summer, right, someone else noticed that these had kind of coincided with some interesting patterns in some of our technicals. So certainly not out of depth to assume that when something like this, right, a lot of us tend to think, oh, okay, right, Roaring Kitty or Ryan Cohen, like they're trying to tell something to us, and maybe yes, right, maybe sometimes that is the case, but right, maybe with a lot of this stuff, they're primarily trying to communicate to each other stuff that we as retail investors might not necessarily understand, but which the two of them might understand given their wealth of financial and investing experience at large, right, for many years. So a part of me wonders, is some of this sort of 69 single share overnight market order stuff, is this something that could be used to as another mode of the kind of there's two of them talking, right? Because I was talking to some people about this the other day too. The idea that I noticed, I have to take a look now at trading view charts because I've started using these a bit more extensively in addition to what's coming up on Thinkorswim, right? Because Thinkorswim, right, my brokerage is Schwab. Now that kind of like overnight data is on certain timescales, it's being factored into our moving averages. It's being factored into moving average calculations. It's being factored into regression analyses, things like that. Usually with regression channels, it doesn't mess with it too much, but it does change. It does create discrepancies between that and some other platforms as to where exactly our moving averages are. So that can screw up trading throughout the day. So I've had to kind of flip back and forth between looking at that, looking at TradingView, and then trying to kind of get a sense of, well, okay, which of these is really, how is this going to behave? Like, how is this going to be taken into consideration? I'm not, jury's still out because we're only about 6 weeks, I think, 6 or 7 weeks of trading into GameStop being able to be traded 24 hours a day. So, but right, this phenomenon, it's worthwhile pointing out, right? For some of us, for some of you, you might not even see these shares come up if your brokerage doesn't participate in 24-hour trading, if it doesn't take place in the blue ocean overnight extended hours period from 8 p.m. to 4 a.m. So, right, these are sometimes, right, Robinhood, for example, has been offering trading on this market for a much longer period of time. But right, so just to kind of point this out, maybe to some of you who haven't noticed that, but these 69-cent orders have been pretty conspicuous. So I wouldn't be surprised, perhaps, at this level, if this is something perhaps that our favorite traders, our favorite investors are using to communicate with one another. I won't speculate too much heavily on it, but I think it's worth calling attention to. It's something that has right. It'll come into play when I think about our technicals a bit. So we'll start with our review. We'll start with our thinking about what happened yesterday. It does look like in SPY, right, we traded down. Well, right, when I was making my video yesterday, this happened. Right, I kind of flipped over. I was like, all right, we're not really doing much. 603. Okay, let me flip over here. And then as I was recording and talking to you guys, then it just said, like, it was just like 598. I was like, oh, all right, there we go. Right across the volatility trigger while I'm talking. So, but we do look like we just kind of reversed on the touch of this daily moving average here. So, right, we traded down to the 50-day moving average and then, reversed right back up. And we can see that over in our, right, somebody said the word inflation at the Fed. And so that meant apparently that we do this. Definitely, if you look at the options data, so if we scroll down a bit, right, we look at our options gamma here, right, conspicuous, right? Okay, we have not too much. It can be dropped through here. This kind of spikes as we start to move down here. Obviously, 600 is our volatility trigger. That's a big position. 599, big position. 598. Okay, but then on the other side of that, right, it kind of lightens up a little bit. But so you could make a case that, okay, right, the options hedging, right, market maker hedging kind of dies out, maybe a little around there. We stopped short of 598 though, so not sure the degree to which maybe that would hold up. But maybe it seems to have played a role that it lightened up after 598. And then, of course, we do have that technical marker there, that 50-day moving average, right? Sitting here judging this, right, from my from my armchair financial analyst position here on my laptop, it's kind of difficult for me to say, okay, to what degree did the price reverse at 598.23? As the result of a technical reversal, or as the result of traders detecting a change in the level of market hedging based on how quickly the price descended. I don't know, right? And the fact that, see, what was weird about this, right? I guess why I'm partially more inclined to think that maybe, well, am I more inclined to think that it's more technicals? The dip happened before the market opened, right? So traders couldn't react to this by trading their options. What we did see is that similar pattern I've talked about a number of times, where I don't want to get it too much, right, because this is a GameStop, not a SPY discussion, but it's worth considering given how it looks to have affected some of our price action yesterday in GameStop. Right, when we see these patterns, especially these very steep dips, and if it's not really critical news, we saw this with the DeepSeek dip. We saw this with DeepSeek 2.0 that apparently had something to do with tariffs last Monday. That is Monday last week. Traders see these big moves down during the pre-market hours where they cannot do anything with their options, right? And so options hedging does take place, but dynamic movements and changes in the key levels do not. So if the price gets pushed around, it gets pushed around, and then hedging happens with all these positions remaining static and unable to be changed. What happens usually when the market opens, as we've seen, if it's not something really, really critical, is then traders want to go ahead and make money off of, they want to close their positions based on what just happened in that pre-market move. So we've seen this happen every single time over the past couple weeks. Big move down pre-market. What do traders do? Close their puts. They want to close their puts, which means they're selling their long puts, which means those are bullish trades. Those are bullish trades which are affecting market maker net delta and gamma hedging by closing short shares that are used to hedge those positions. So that's causing a lot of buying, and that sends the price back up. And that's what we saw, right, pretty much throughout the day, right, moving through this kind of neutral, slightly put gamma dominant territory, right? So we got some scrubbing, but basically, again, moved back up pretty much by the end of the after hours trading period to where we started that dip the previous day. So, not seeing a lot of commitment from the market over these past few weeks to really meaningfully go for new highs. Momentum's not been there. We've been, again, because this is not a SPY video, it's not a broader market video. Curious to maybe what has to come along to see maybe a test of that call wall again, but we don't seem to be moving out of this kind of up, down, go across the volatility trigger, come back over 600, scrub up and down 605, 600 a bit. This is happening a lot. So I'll sort of leave comments with that for there. What I will say, right, is that did affect our price action yesterday with GameStop. Right, key levels heading in today, obviously 610 for the call wall, 603 for the gamma flip line, 600 for the volatility trigger. Kind of more of the same, right? So call gamma above 603, slow, grindy, nothing too exciting. If we get these little kind of catalysts for a dip, and we move across 603, then we kind of accelerate into 600. Volatility spikes a little bit at 600. We haven't seen that happen too much intraday, right? The big volatile moves haven't happened intraday. So that's why we've seen so much put closure the following, once market actually opens. But right, so we got that downward kind of move there. GameStop started to trend down with it, and it continued to do so until we got to this 570 kind of historic price resistance mark. It's also where we had our 54-hour moving average. Bounced off of that, and then kind of very, very slowly, listfully moved into the close, went back up above 26 for a bit, almost made, right? How far did we get there? Yeah, like 26, lower 26s, but then, closed eventually below 20, just below 26. You'll remember, as I talked about yesterday, right, that I more or less said, okay, if we move below 26, like I think there's a chance we move down to 26, but if we move to 26 and then bounce off of it, I think there's a good chance heading into today that maybe we get, a move up to 28 or something like that. Obviously, that didn't happen. This was unfolding before our eyes. Yesterday while making the video and watching what was going on in the pre-market. 26 didn't hold up. Maybe a bit of shorting comes in there, especially on these kind of sharper moves down, to really kind of get us through. And you can see our behavior right around that 26 level. Right, so this kind of scrubbing up and down, like when we run into these, what would you call it? So net trader positive, net dealer, negative gamma exposure positions, right? You end up seeing this kind of scrubbing on top of it. So you can see how the $26 position, right, as traders are kind of, okay, well, go up, go down, right, and sort of hedging is providing downside support by opposing, right, when you have that orientation of dealer gamma, it's going to push against the flow of price action to the downside, and so you're going to get this kind of scrubbing effect at that key level. So we did see that, but then we did push through there and down to this sort of 25. I think very briefly we touched kind of like 25.61 or something like that before immediately reversing back up. That did look like, right, and so you can see the volume candles here too, right? They just kind of spike at the bottom, right? You just get this diagonal line down and then a spike at the bottom. This is a shorting pattern, right? That's recognizable. That's recognizable on the tape. Big red candles, right? So if you go and you put your volume bars, if you use Thinkorswim or something like that, or you want to color them based on the candle color too, right? You'll see these big red tall bars at the end of a diagonal line of red down. That's if you're not like, I suppose it could have been some limit orders in there too, but something had to start the push through there. So right, limit sells in terms of stop losses could have factored in there. But I would still be inclined to think that was some shorting kicked that off. And so that's that kind of tactical shorting that I also talked about yesterday. And you'll see, right, you can cause pretty meaningful, if you're an institution, you can cause pretty meaningful depreciation in the price if you target key options levels with concentrated short volume. So you don't have to go borrow 1 million shares and then super tank the stock, like say on January 14th. Right, you can, on days like this, if you want to make sure that certain supports are breaking. Yesterday was a very low volume day, right? So we were back below 4 million shares traded, like 3.9 million, 3.99 million, very close to 4 million. Right, you can deploy short volume like this in such a way that it'll override the force of market maker hedging. And sort of break that kind of stalemate between organic options trading activity and how market makers are responding to those changing positions by hedging. So it looks like that was used to break the stalemate and then sort of force us into this continued downward pattern for, well, what's projecting to be a downward pattern going forward at this point. So yeah, as you can see, low options premiums looking like we did basically last Friday. Slightly bearish skewed, but not terribly, pretty neutral. Shares to borrow up to 3 million now, so looking like we did back at the beginning of our November run. Certainly interesting to point out there. So this is what I'm basically saying, kind of get us looking like we've got some bearish momentum building up here. So this is also where the 69-cent order kind of comes into play, and where my comments will be regarding that. So as we see here, right, this was, if we kind of consolidated in this area, it didn't kind of move down and through the 26 position, then there was a chance, okay, we consolidate for a day, and then today, right, then like if you imagine price action kind of hung out around here, then kind of move up here to the 2880 kind of area, 2850, and then kind of cool off, right? We could have done that. But because we came down here, right, now we find ourselves in this position where, okay, if basically the price holds here and we do consolidate above this level or trade slightly up into kind of the lower 26s, another kind of low volume consolidatory day, ultimately kind of ending in the upper 25s, like 25.75 kind of again, or 25.90 or something like that. If we can do that, right, then we'll kind of log this 2-day consolidation period, and then we can sort of into tomorrow and Monday, then kind of trade up for maybe to try to aim for a slightly higher high. The 204-hour will move down. It would no longer be in the 2880 region. It'd be probably much closer to 2850, probably down in the 2840s or 2830s, something like that. So that would be a much more manageable high. We could potentially test that going into early next week. Of course, what would that do? What would that serve? Why would institutions be interested in doing that? Well, they could drive IV up again after and this is something, right, you can take a look at this. IV right now is almost back down to the lows that we had last week already after 2 days of trading off of that spike on Monday. So can pump IV back up, right? Get it into the 80s again, right? The low 80s, something like that, on a test of the lower kind of 28 area. Log a higher high. Oh, get people excited. Get buyers kind of coming in, piling into those long $30 calls. Oh, we're going back to the 30s. It's still on. Here we go into February OPEX, and then We get up here, we test, we deflect, and then we trade back down, and it's $26 again by February apex. And you can do that in a few days, right? We just saw that take place. You can do that over the, between a Friday and a Monday. So that's not too difficult to pull off, and there's a lot of money to be made. Certainly, I mean, we saw all of the options buyers that piled in on Monday to try to squeeze every cent out of this run, and of course, who ends up winning? Whoever sold all of the calls on that run. Given that we're working our way now steadily back down to where it started off from as soon as market opened on Monday. So good to keep in mind. So we could do that. That's kind of the more bullish scenario. Again, if we consolidate today into tomorrow, as I'll point out when we look at our options gamma exposure, what that situation looks like as far as we might see some action on Friday. Again, the overnight thing may be screwing with how some of this is being played. I'm not going to speculate too much. Something for me to continue to think about, but if we consolidate for a day, 2 days, then we could see that run beginning of next week. Where it doesn't pose a threat to this week's contracts, but into that level, kind of Monday or Tuesday again, something like that. Next week. However, right, we could also see, we actually trade down, we move out of this, and then we kind of bleed down here, and then by Monday, instead of looking at big ups back into the 28 sort of 50 area. And this could still happen midweek or something like that. But we go for that test, that double bottom at the 200-day moving average that we look to have logged support at last week, which we, on Friday, right, when I was saying, hey, like we have all of these signals, these like short-term reversal signals are really compounding today. On Friday, that was what I titled my article. And sure enough, on Monday, we did get this pretty decent size reversal in the stock price. That was a big one of them, right? Was finding support at the 200-day moving average, not moving below that. That was a pretty key support. What I also find interesting is that, right, so on our 4-hour chart here, I have this line drawn in blue, which approximates where the 200-day moving average is. And yeah, very interestingly, whoever did this single share purchase of at 24.69 pretty much placed it exactly where the 200-day moving average is. So certainly interesting to see that, and that's perhaps where I'm going with this these 69 orders is. I noticed this actually way back in, when was this? December, I guess. Was this December or early January? I think it was early January. Was this, this run that we had? Kind of a reason why I thought we weren't double topping was that we didn't quite get as high as that kind of first peak. I thought maybe we have another day of kind of up in us, right, to kind of try to test this 35.50 area. But then right after hours, all of a sudden, I was a little perplexed because we got this single share order. It was one of the first times I had ever seen that type of price action occur. Get logged on one of my charts because of overnight XO. And it was a single share for $34.69, which came in pretty close to the top of the bullish regression channel that we were trading in there. So I thought, that's kind of weird. That seemed to me conspicuously like somebody knows that we were trading in a regression channel, and was kind of like marking that, or trying to make that, do that to affect the way that the TA would play out, or make it look like we double topped. I was a little curious about that and who exactly did that. But we didn't get another one of these until right here. So way later, this is about 3-4 weeks ago, we got another one of these. This one was for 28.69. This was another sale of a single share at 28.69. Then Well, that was also interesting too, because that was a few days after Roaring Kitty dropped his last his Futurama tweet on January 22nd, which was also at exactly 8 p.m. when overnight Exto opened. Um, one of his other tweets might have been as well, but I do remember that this one, right? This marker, even though this one wasn't 69, right? This one wasn't 69, but it went up all the way to the 204-hour moving average. So what seemed to be interesting to me here is like a lot of these have to do with the 4-hour chart, right? With these moving averages, with regression lines, kind of a thing. But this was clearly something Roaring Kitty based. It's like, okay, who's doing this? Is somebody pushing the chart this way? Like, is this an algorithm? Like, what's going on here? But then, I would definitely say this fourth time here, this fourth order. Did I miss one? Actually, I think I missed one here. This is the fifth actually, because one happened the other night too, right here. That one didn't seem to touch actually a technical marker, although prior to today it would have touched the top of a regression channel. In any case, there was another one here for 69. That was an ask order for 69, 27.69. Today was for 20. Yesterday was for 24.69, and then there was another one for 26.69 about a week and a half ago. So they all end in 69. I missed this one, right? It's five. It's five in the last 6 or 7 trading weeks. So what is this? What's going on here? Why do so many of these look like they are checking key technical? Like they hit key technicals like exactly. And then they form what looks like, right? They form this like crazy conspicuous wick. Roaring Kitty's tweet back here did that too. And also at the same time, it's all, Ultimator was very good about pointing this out, saying they all happen at exactly 8 p.m. Eastern time when the overnight market happens, and they're all for one share. They're all for one share. Could it possibly be that, is whoever this is this person trying to send a message? Is this person trying to send, communicate something? Hey, look at this. Hey, look at this. Hey, what if it's, multiple people doing this? I don't know. But the fact we've got 69 there in the cent marker consistently through all these orders tells me, okay, this is somebody who wants us to pay attention to this. Don't know who it is. Don't know if it's Roaring Kitty. Don't know if it's Ryan Cohen. Don't know if it's somebody else, but whoever is doing this wants us to pay attention to this, and does in fact look like they are pointing to technical levels for some reason. So interestingly, as far as the double bottom question here, are we going to see, is this person saying, oh yeah, well, we're going to move back down to that moving average, and we're going to find support there, and then we're going to reverse to the upside, something like that? Was this person, pointing out resistance points here, something like that with these earlier markers? I'm not sure at this point. I'm not going to speculate terribly. I'm not sure it gives us, I have too much to say with respect to this, kind of as it gives us insight into these two principal scenarios that I laid out, either this bullish or this bearish scenario, what I'm looking at today. But I would say at the very least, whoever this person is, it does seem to suggest that this person thinks that the 20, I should say the 200-day simple moving average is something that we should pay attention to. That's what that seems to say to me at this point. So I will keep paying attention to it, and I will keep looking out to see if these 69-cent share orders keep popping up at key levels on our 4-hour chart here. So yeah, something to take into consideration. Right, options, not terribly interesting yesterday. We did get a lot of profit taking and loss cutting. 30 was kind of where we got some of the most conspicuous loss cutting heading into, is it heading into next week? No. That was, Where was this? Where did I mention this? Yeah. Oh, yeah. 30s for this week. 30s for this week. Came off the board mostly at the bid. Heavily traded, but came off the board mostly at the bid. So that was loss cutting. 28s were kind of mixed. 27s were mostly sold at the bid. Yeah, not too much exciting heading into the end of this week for our options. For next week, we did actually have a lot of calls opened at 30 at the ask. So over 3,000 were open just yesterday at the ask for next week, and they look to have been pretty stable, right? Based on looking at how the contract changed throughout the day here, they're pretty stable in terms of their price. It looks like they closed the day down a bit versus, well, probably exactly right where this trader kind of picked them up. So interesting to see that many contracts come on the board in this kind of chunk order here. So maybe somebody's betting on a reversal sooner rather than later. Something to keep in mind. Max pains are still hanging out at around 26 for this week, for next week, for the week after. So still looking like 26, 25 for beginning of March, but contracts are still light. 26 for March 14th. Again, contracts are light. 25 for March OPEX, and for the week after that. So we're still kind of in this area. Our options data doesn't really say anything that would suggest that market makers in particular would benefit from us kind of moving too far down out of where our trading range is now. Something like a break of where that 200-day moving average is. We've been seeing institutional filing reports come in, and certainly institutions throughout quarter four, or I should say up to the end of the year, up to the end of December, adding, right? Big groups, Geode adding millions of shares, Vanguard, BlackRock. Don't know about State Street yet. Be interested to see what some of these other proprietary firms are doing. We did have a new firm open up a position. Forget exactly, like Alec Goose or something like that. I'll have to take a look, do a little deeper dive on some of that. Maybe we can take a look at that, for this week's live stream. Right, still at 26. Yeah, with our setup here, right, with our gamma, this is kind of the issue I was talking about as far as, hey, if 26 fails, then we just kind of hang out in this sort of limbo, because then 26 itself becomes this overhead resistance point. And then, institutions can just go borrow 100,000 shares, concentrate it, push us through that level. No sweat, not a problem. But we did kind of trade back up over it yesterday, probably as whoever shorted those shares went ahead and closed that trade. But intraday sort of normal options flow might have a hard time pushing this $26 position based on how much call gamma we have accumulated there. And we have kind of, put gamma kind of below us. So if we do trade down, yeah, that's going to be, it's not a ton of total gamma. But, we would kind of slip down there. We could easily slip down there over the next couple days toward, 25 into that sort of neutral zone, kind of get pushed a little bit, maybe out of the money, 24.90 something, or, something like that. It's not a long shot. If we do get somebody coming in, right? If we do see something like we stay pretty close to 26, looking like we did in, mid to late September on that September 20th run, we could see, actually, didn't we look like this too on like August or October 25th? Yeah, actually before the actual full run fired off for the squeeze-iversary or the VW squeeze-iversary and National Cat Day. We did get a little gamma ramp that Friday too, October 25th. So we could see something like that develop tomorrow. I've talked about this a number of times in the past. I'm not going to talk too much about it now, and maybe going into tomorrow's trading, if we do in fact kind of hold this price range, we don't dip too low. Maybe we even trade a little bit above 26 and then come back. We could be set up because we have so much. We actually have a lot of call gamma very tightly packed in here. 2650 doesn't inspire, but remember That's because of those. Yeah, that trader still has not closed those puts. Still has not closed those short puts. So that's positive. That's dealer negative gamma. So they're gonna be hedged like trader long calls. So all of that, we do have this concentration right up into 28, and then we kind of die out at 28.50. So all of that's there, right? That gamma hedging potential is there. And IV is now back low again. If it dips again today and we're back in, say, like, around 47 or something, mean 10-day mean implied volatility. Today might be a good opportunity for institutions who maybe want to force a run or something like that to go pick up some very, very cheap out of the money calls. Something like, I don't know, buying a block of 4,000 of them, like what happened yesterday. Those 3,000 some odd $30 calls. Maybe we get something like that. Yeah, so this is again that type of setup that we saw happen a lot in the fall. Like, it usually happened on Friday because you want to get the most alpha you can, right? So something to watch. Don't necessarily think it would go off today. I suppose it could if an institution wanted to, but maybe buying those calls for next week is a. But then again, if you're going to drive the move, then you would, why not just buy them for this Friday, right? Because you're going to set off the move. Yeah, so that structure is in place. We'll see. We'll have to see how that plays out. If that does play out, I could see that as being a part of a multi-day kind of run up to that 28.50 area and that test of that 200 4-hour moving average. So that is in play. I'm staying cautious. I'm not giving myself 100%. Oh, it's definitely going to happen. Here it comes. Go bet the farm on this. Absolutely not. I mean, in general, this is not trading advice, education, entertainment purposes only. But even for myself too, like, yeah, I'll I have to watch what. This is why most days I don't take any trades. I just watch stuff. Like, I do this writing and I make these videos and I talk to you guys and then I watch the charts and I'm like, okay, here's what I'm watching. If these things happen, then maybe I'll do this. But if they don't, then we're probably going to do this, and then this means this, and then okay. So that's what I'm looking out for today. These are sort of the two main likely scenarios there. I have them laid out in a couple places in the article if you need a refresher. But sort of, yeah, if we can hold this level, if we can hold the 25.70, 26 level and kind of trade even sideways into tomorrow, I think we might have a chance. We do have a chance, number one, at a possible Friday gamma ramp thing. If institutions still decide they want to do that, maybe they're done with that. It's not cool anymore. Too predictable. I talk about it, so if I talk about it, then everybody knows about it or something like that. And then the second one is, if we don't, then we probably go down and we test the 200-day simple moving average. By Monday, something like that. It'll look something like end of last week. Maybe that's something that this 69-cent messenger man wants us to pay attention to. Maybe not. So we'll have to take a look. We'll have to see what happens today. Yeah, definitely good luck out there to everybody. Thanks, Thanks as always for watching and listening. Wonderful as always to talk to you guys. Wonderful as always to share thoughts. If you have questions, comments, go ahead, leave them. Leave a like. You don't have to like, but leave a comment. Right? You have questions. Always love to hear your questions. Always love to hear ideas, feedback, concerns, that sort of thing. So yeah, so thanks very much, guys. We'll see you next time. Take care now.